Thank you everyone for joining us today. We'd like to welcome everybody to Organize, webinar series on organizational capacity building. I'm your host, Althea Shea Hart. The Emory University Campus Coordinator Center created this monthly webinar series to share with a broader audience of Southern nonprofit professionals some key information they may be missing. These webinars were designed for the busy nonprofit professional on the go to get a quick training and resources to help their organization function at the highest level. These webinars were designed to give people a look at the other trainings we have available at Compass. Each webinar will highlight one or more of the 8 core areas of our capacity building trainings. For more one-on-one trainings, we invite you to request a training at our website, which is www.GYHicksCPA.com. Today's webinar, Building Your Nonprofit on a Solid Financial Foundation, Understanding the Basics, will highlight a few strategies that all CBOs can and should consider using to create successful financial systems. Know that nonprofits contributed $985.4 million to the U.S. economy in 2015, which is 5.4% of the U.S. gross domestic product. With nonprofits making up such a sizable contribution to our economy, it's important that we make sure to have the right tools to manage and maximize funds. Today, we will hear from our financial wizard who knows just how money works, Ms. Glenda Hicks. Ms. Glenda Hicks, I turn it over to you.
All right, thank you so much, Althea. Good morning, everyone. I'm so excited to be with you today. We have a short webinar presentation. We just want to present you with some foundational concepts and understanding about getting your nonprofit house in order. So just as a brief introduction, I am a CPA and a certified governance trainer. I've been in the profession over 30 years, and in that time I've worked for I started my career in public accounting, working for Coopers & Lybrand, which is now PricewaterhouseCoopers. And when I left that firm, I went to work for my first nonprofit organization, which was a big one. It was the University of Miami. So I was in their controller's office. And when I left, I went to work for a local community-based nonprofit organization, which was an HIV/AIDS organization. And I came there as their controller, and then became their interim executive director and helped them to merge actually with another nonprofit organization in the HIV/AIDS space that was focused more on healthcare, whereas our organization was more on workshops and training and information. And so from there, I took a year off and we had our first child, and when I went back to work, I figured that I was ready to do this thing by myself, and that's when I started my firm. So I'm really excited to say this month actually is celebrating my 20-year anniversary in practice for myself. And in all these years, I believe I can count on one hand how many for-profit businesses I served. It just seemed that every referral I received was from to help a nonprofit organization. And eventually I realized this was my calling. This is where I was supposed to contribute my talents and gifts. And at that point, I intentionally began just focusing on helping nonprofit organizations to build their capacity, to build their infrastructure. And of course, being a CPA, I started in the finance area, and I really helped organizations one-on-one with their financial concerns, holding their hand, not providing audit services or tax preparation or anything of that sort, because from the work I had done within the organizations and starting to serve clients, I realized they really needed one-on-one help that I potentially could not provide if I did their audits, and because there's a whole independence issue that has to exist when you do that level of services. So I continued in that vein for many years, and then thought, there's still something going wrong here, and I think it emanates from the board level. And that's when I transitioned my services and really pulled back from the number crunching and the hand holding and began working on a more project focus and consulting basis, training the board members to really understand their roles and responsibilities, and still supporting the finance departments in terms of their preparation for their own audits or preparing their 990 with a different CPA. And I kind of became their middleman, their liaison, because I could speak the language on both sides, if you will. And so in that capacity, I've been serving nonprofit organizations probably 6 years since that time, and in this way. So I'm really excited to be with you all today to align with Emory and the Public Health Department and Gilead to present this training through this Compass initiative. So what we're going to do today is just focus on 3 short things. We just want to introduce the concepts to you, let you know about some services that are available, and take some questions. So we're going to spend a short hour with one another, but the 3 things that I hope to accomplish are to help you to understand the mission critical significance of finance. A lot of people, you either love it or you hate it. You either majored in school or you did everything you could to avoid it. And so the reality is, though, it's, I guess, a necessary evil. And it really is an important component. I want to explain that to you today so you have a better clarity about how it all fits together. Then I'll share with you some key concepts about, as I said, getting your financial house in order, and then what are some consequences when these things are not understood, addressed, and implemented. And then I want to move into just speaking about some of the services that will be available to you because of this relationship with this Compass initiative, and then close with letting you ask me some questions that you might have that you want some immediate input for. So with that said, we'll just go ahead and dive in and advance to the next slide. All right, so this is what I call the mission critical hub. And this is where, again, being biased, I feel like finance is the hub of the organization. It's a given that you founded your organization for a social cause, that you created it to address a need in the community, to fill a void, to pursue a passion, and that's really what it's all about. So really surrounding this diagram that I've depicted is the larger vision and mission of your organization. And I credit Susan Gallego, I think is how you pronounce her last name, another colleague and consultant in this Compass initiative, for asking the question in a prior presentation this week that, you know, does it, surrounding this visual, is there the mission and the vision? And absolutely there is. It first and foremost begins with your mission and vision. Under that, there should be an infrastructure in place that helps you and equips you to do the work that you want to do. And that's important because you want to instill trust in people so that they're inclined and motivated to trust you with their resources, to give you grants, to give you donations and of cash, as well as other things you need to run your organization. But I created this visual because I think it best articulates how finance really and truly has their hand in almost everything that happens in your organization. When you get to that point that you're able to hire employees, they have to go through finance. There's legal paperwork that has to be completed for the IRS to ensure that payroll taxes are withheld properly. Also for your states, in the case if you're pay income tax at the state level, and even at the local level. There's some places that have local income taxes as well. So you're going to interact with finance in that regard. And then, of course, all of your benefits that you hopefully will be able to offer to your employees at some point will flow through the finance department. You then have regulators, those who are keeping their eyes on you because you have to maintain compliance with various aspects. If you're dealing with children, for example, there might be child protection laws involved. But a lot of that is going to filter through your finance department in some regard because they may want financial information to validate and substantiate the work that you're doing, or what it cost you in order for them to cover those costs, or how you spend that money to make sure it's spent in the way that you said you would spend it, according to the grant application that you may have submitted to them. So there's a lot of interplay between those two. Your clients have an interest in your finance department. You may have services that you render that allow you to pay a stipend to a client for some purpose, or provide transportation tokens, bus tokens, or to provide meal supplements. A client may have an interest just in how things are run so that they feel comfortable and confident that their needs are going to be met and not suddenly terminated because you don't have the funding to continue doing what you started doing for them. Obviously, your vendors have an interest because they're providing services to you. You're buying your office supplies. You're paying for your office rent. You're hiring consultants to come in and provide program service delivery or even services to your agency. Each of them wants to be paid. So there is paperwork that goes along with processing that payment, and it's going to filter through finance. When you're looking for bids, a lot of times you have requirements in place from funders or regulators that say you have to get 3 bids before you make a purchase to prove that you've done your due diligence and that you've involved enough diversity in your procurement process. That filters through finance. The obvious relationship is with the IRS. You had to apply to them to seek your tax exemption status. You have to report to them on an annual basis to maintain your tax exempt status. You have a return that has to be submitted, which is your document really that tells the world who you are and what you do. Many people don't realize that your tax return is the most readily available document that the general public has access to be able to find out about who you are and what you do. And the way they get that outside of asking you for it is to go to what used to be GuideStar, guidestar.org. And I say used to be only because they've recently merged with Foundation Center and have now become a new company called Candid. But I think each of those entities is still operating under their original brand and identity. So you can still type in guidestar.org and you'll get there and you'll find it. But that's where folks go to get your tax return and find out more information about you and to see where your money is going, to understand how much is going into programming versus administration versus fundraising, and to really see the accomplishments that you've achieved over the past year, which is a section of the 990 where you can speak to what you've accomplished, and it gives you that opportunity to tell your story. The next group of stakeholders is the board of directors. They're setting the vision for your organization. They're working with the director to establish that strategic plan. They're responsible legally for the sustainability of the organization. And there are many roles and responsibilities of the board, which is an entirely separate presentation. But what I want to point out here is that the board needs to get accurate, timely, complete information from a financial perspective so they can make the decisions that they need to make. If you want to expand your services, if you want to go into new neighborhoods, if you want to add new programs, hire staff, provide raises to your staff, provide benefits, all these kinds of long-term decisions which are implemented by the director and the supporting staff are decided upon by the board. And they're put into place with various policies that the board adopts in their meetings through their motions. So they want to ensure that they're getting timely, accurate financial information so they can make the best decisions possible. Program Services has a need to understand what's happening from a financial perspective because they want to know if they can do the great things they're envisioning. When you're on the front lines providing service, you're hearing from your clients, you're hearing from your customers, you're hearing from the people in the community, and you're thinking in your mind and brainstorming, how can we meet this need? How can we change the way we deliver services? How can we be more efficient? How can we be more effective? Well, those ideas are great, but you can't just roll them out. You have to consider, do we have the financial resources to do this? Do we have the capacity, the bandwidth, the physical space, and et cetera to accomplish this? And so talking with your finance department, including them in the conversations when you're seeking new funding and writing proposals is critical, because you want to ensure that what you're doing is consistent with what the board has already given you permission to do. Ideally, you're working from a board-approved budget each year, and so that budget has already been developed, presented to the board, presented with underlying assumptions, and agreed to. And so if the program department is starting to embark on new initiatives and they haven't ensured that those initiatives are consistent with the goals and objectives of the strategic plan, and from a financial standpoint are consistent, then there's the risk of committing the organization to things that you can't provide, or committing it to things that you can't pay for. And so I have seen situations where program staff may have written budgets without consideration of what's already been agreed upon, and now they're in a situation where it's inconsistent and they're trying to do things that they don't have resources for. So it's very critical that these two understand and communicate with one another. And then lastly, of course, your donors. It's one thing to motivate a person or inspire a person to make a donation to your organization and to get them to commit and align with your mission and your vision. But if you don't keep them updated, and if you don't steward that relationship to periodically let them know, hey, this is what we did with your funds, or this is how your funds made a difference, or this is how we were able to meet this need because of the funds that you provided us, then they're going to feel unappreciated. And they're going to feel like you didn't really care about them as an individual and what resonated with their own value system. You instead just saw them as a financial resource. So making sure that you're sharing that information on a periodic basis in various ways with your donors is very critical, because you not only want to retain them, you ideally want to bump them up to a higher level of giving so that you're increasing their donations over time and they become a larger donor to your program. So this is the visual that I just think helps to represent that information is constantly flowing in both directions, and the finance department most times has some role or responsibility in all of that. And it really helps to see it graphically, hear it verbally, and then understand it and begin to operate in that space. So at this juncture, before I move on to the concepts, I just want to pause briefly, even though I know we have a Q&A segment at the end. Are there any initial questions or comments about what I've presented so far? Is this an aha moment for any of you that you would like to comment on at this point? And you can, I think you can unmute your lines to speak, or you can type something in the chat box. I'll defer to Darian also to support me in this point. Any questions, comments, or observations? Okay, well, hearing and seeing none, I will ask that we, oh, wait, I see, let's see. Yes, okay, he's just informing everyone to feel free to unmute your lines or to use the comment box. Okay, well, I'll give you some time to warm up to the discussion and formulate your questions, and I'll ask that you just advance to the next slide for me, please. Okay, so this is a chart, a graph, a slide that just shows the key concepts that I want to speak briefly about, and then the consequences. In accounting, it's all about internal controls. It's all about what we call segregation of duties, because at the end of the day, you want to instill, again, that confidence and that trust in the community that you're not only doing good work, but you're stewarding the money appropriately. And the way you do that is you set up an infrastructure that separates responsibilities among as many people as is possible, but also feasible. And I say that because you don't want too many cooks in the kitchen, so to speak, to where everyone's stumbling over each other and there's just too many voices and things are actually not occurring because there's just too many people. But the other side of that is when there's too few people. And the issue is, because a lot of the organizations, community-based organizations, are very small, they really struggle with this concept. They'll say, we're only a 1, 2, or 3 person shop. You know, how do we really separate out accounting functions so that one person is not doing everything? Because what really happens in the real world is you may have one bookkeeper who's receiving the deposits, receiving the checks, writing up the deposits, recording, taking them to the bank, recording them in your accounting records, receiving invoices from vendors, consultants, and the like, approving the invoice, writing the invoice check. Usually they're not signing the check. So that's the one control that most organizations do have in place, is someone else is signing the checks. And then, but they're still processing the checks, mailing the checks, and recording everything in the system. And the issue with that is, from the outside looking in, there's clearly opportunity for someone to do something wrong, to do something illegal, or to do something even just inadvertently and by accident. If you don't have the appropriate supervision and approvals in place and checks and balances, you're lessening the opportunity for you to prevent things from happening. But then also, if they do happen, you're preventing them from being discovered in a timely way. And so I've done presentations for groups, and I've talked about the fraud side of things and presented the statistics, which I won't go into today, but they clearly indicate that a lot of defalcations occur because of lack of proper internal controls. And then because of it, they last longer than they otherwise would have if you did have these controls in place. So there's some things out there available that we can make available to you through the services that we'll provide through the Compass Initiative that can strengthen your internal controls and your operations to help you not only in fact be more effective, efficient, and have those controls, but also in appearance to let the outside world know that, hey, it's okay to trust us with your money because we've got these in place, things in place to give you that sense of comfort. The other key concept is having capable, competent staff. Again, as startup organizations, it's a lot of times hard to identify an accounting or bookkeeping person to support you. But even as you progress, it's still challenging because you want to ensure that you're growing internally with your structure as the agency is growing in service delivery. And a lot of folks use QuickBooks because it's very intuitive, hence the name of the company, Intuit. But it's very intuitive, it's very much like your checkbook, and it's easy to learn, and it's very inexpensive. The problem is people that are not accountants don't understand what's happening behind the scenes. And so although you can write a check or make a deposit, if you make a mistake or you're out of balance, you can't always find the source of the problem. And I work with clients still that have this issue where they have someone capable of the basic functions, but not trained, experienced, and educated formally in accounting processes to be able to do the complete function. And I see this a lot as well with founders and executive directors who already are wearing so many hats. They are also expected to do the record keeping. And of their own admission, they're not comfortable with it. They don't enjoy it, but they do it because they have to. And that's unfair to those leaders to put that expectation on them when they're not equipped to do it, to not raise the funds as a board to allow them to be trained, or better yet, to allow the organization to hire the staff. So keep in mind that having that competent, capable staff on board is really critical, and it will help keep you out of trouble, but it also help you to stay on top of things. Interdepartmental communication. Let's see, I have a question. What's your opinion of using MS Excel as finance system at startup? Well, first, thank you for the question. some folks do use Excel because, again, it's a spreadsheet-based platform. It does calculations for you, and it allows you to set it up in a way to itemize all your revenues, your expenses, and you can see what the net surplus or deficit is at the end of any given period. It's better than nothing in terms of starting, but I would suggest that you quickly move to some sort of accounting-based program that can track things more logically for you, and that you engage someone who's skilled in that area. And the reason that is because Excel becomes cumbersome, and it's a lot of spreadsheets that you have to maintain. And then if you start creating different spreadsheets and you want to put links within them to update, when you update another spreadsheet, it just starts to become a huge ball of wax, if you will, that can, because of human error, actually create even more work and issues, because your formulas could be typed in incorrectly. You could inadvertently hit one number versus another. And although you can make similar mistakes in a structured program, like an accounting program, there's other checks and balances built into the program that will alert you when things don't match up. So, if even something as simple as making sure you don't pay the same invoice twice. In most developed software programs, there's a check that says, or a balance that says, this number was already entered as an invoice number. Are you sure this is not a duplicate? So something that simple can save you from paying someone twice accidentally. So the short answer is yes, you can definitely use Excel as a starting point. But the longer best practice answer is, as soon as you're able to focus on raising dollars specifically to allow you to hire capable staff, and they don't have to be employees. It could be a consultant. It could be a small local firm or a bookkeeper that has her own practice providing services to a myriad of organizations for a flat monthly fee that covers X number of functions. That will work as well. But the more you can do on the front end to lay a foundation, the less frustration and angst you'll have on the back end. So I hope that was helpful. If not, send me another chat and we'll revisit it. But on the interdepartmental communications, it's very important that everyone understands what I laid out on the prior slide in terms of the hub, in terms of speaking with each other, communicating, keeping each other abreast of how what you do affects what I do in the finance department. I've worked with an organization extensively just to help get their employees to understand that even though you're in a different department, you're not in a silo. And a lot of things you're originating as activity or transactions on behalf of the organization, especially from a programmatic side, really does impact what we have to do in finance to report to other third parties, whether it's the funder, the donor, the IRS, the foundation, or whomever, the regulator. A lot of that is driven by activity you're doing or information you're procuring, but because you don't understand how it affects us on this end, we're getting bad information and it's causing additional work and time and even potentially errors or us missing deadlines. So always keep that line of communication, have those short interdepartmental meetings on a frequent basis to make sure everyone's on the same page and they understand on a baseline level how it all plays together. Don't try to make accountants out of everybody. Believe me, they don't want to be, but they do need to understand how it all works together. I referenced a budget earlier, and it's critical that you develop a budget and you work from that budget, because the board wants to see how does the budget compare to actual on a periodic basis. If your board meets monthly or bi-monthly, they don't want to just see actual information, meaning show us financial statements. They want to see that information as compared to what we budgeted to do. Because if there's a variance, they want to know, well, why? Is this just a timing issue? Did we budget $20,000 in foundation grants or in fundraising, and we only have 5 at this point. Maybe it's just a timing issue because the special event is not going to occur for another 3 to 6 months. And as soon as it does, then we'll have that additional revenue and we'll be right on target. Or is it truly an issue of, well, we thought we were going to secure this grant. It was, pretty highly percentaged that we would get it, but then there was some unforeseen circumstance and we did not. So that's a source of revenue that's not going to come in. And so you need to have the conversation of how are we going to modify our existing budget? How are we going to save those expenses that we were counting on having paid for with this revenue source? How do we have to modify the way we deliver programs, or how many programs, or how many venues we're going to, because of this shortfall? So having a budget that keeps you from venturing into areas that weren't anticipated, but also keeps you accountable to how you're tracking is critical. And a lot of funding sources require it. I mean, you can't even write for a grant source in many cases if you don't have a budget. And then comparing that budget to actual and making decisions from it is key. A budget in the month to actual is just one example of monthly reports. There are other reports that you'll generate. I'm sure you're generating a lot of program service focused reports. But with all of that, you should also be generating some financial reports to give the board and your senior management team, your executive director, a sense of how are we tracking? What's our cash flow? Are we going to meet payroll next week? I remember being in that situation with the HIV/AIDS organization I used to work for. We literally were looking for funding on a week-to-week basis at one point. And because of our relationship with our county funder, we were able to call them and say, can you push our reimbursement request a little higher up on the to-do list so that we can get our check sooner rather than later? So having those monthly reports are critical for you to manage your cash flow, for the board to make long-term decisions on where you're going, and for the program staff to know if they can host a given program, given whether or not you've gotten reimbursed, for example. So identifying what those reports are, working with this initiative for additional support, training, hands-on boot camps, if you will, are some of the things I'll talk about in the services that can help you to identify what reports you need, what information you should track, and how they should look. Another key concept is having a treasurer on the board and a finance committee. A lot of our organizations are very small in terms of their board size. You may have only the 3 people that you listed on your IRS application, and that's it. Well, with 3 people, you can't have a lot of committees. You are not going to get your board to commit to serving on a lot of committees when there's only 3 of you. So you must decide which are the most important critical committees that you must have. And I submit to you that finance is one of those top 3. That's a given. Someone has to have their focus on the financial stability of the organization. Typically, that's your treasurer in terms of your officers, but then also you have a committee. And it can be a committee of 2. There are some organizations that have a committee of 1 because that's just the reality. But ideally, you would like a committee of at least 2 so they can talk and bounce things off each other, work closely with the staff to understand what's happening and give them that support, and even become part of that internal control infrastructure. So when I talk about having different people responsible for different functions so you can create that segregation of duties, that can include the treasurer from the board. Maybe they're the ones receiving the bank statement to at least eyeball it and say, yes, everything looks normal and expected. And that approval then authorizes your sole financial person in-house to then do the bank reconciliation so that someone else's eyes are looking at it. So that's a baseline expectation and concept for sound financial procedures. Meeting all your deadlines is very critical. Working from a calendar that itemizes due dates is what we live by in accounting. Everything is due by some date. Your 990 is due 5.5 months after your year end. If you file an extension, you get an additional 6 months. If you have less than 50,000, excuse me, in revenues, you can file electronically with what's called a 990N, as in Nancy. It's an online submission, just basically to tell the IRS, hey, we're still here, we still exist. But meeting those deadlines are critical. If you have application deadlines, if you're under a federal grant that's reimbursement based and they have deadlines for submitting your requests, just ensure you meet those, because typically in those contracts, they have language that says we have the right to either delay your payment or completely deny your payment if you don't meet our deadline. And if you're small, you're fledgling, you're up and coming, cash is king. And cash flow is even larger. And so if you can't afford to have your funding delayed or denied. So meeting those deadlines is crucial. And then lastly, accounting software. I referenced this earlier in response to the question, so I won't go back and talk about this anymore at this juncture. But what I want to focus now is on the consequences. When you don't understand the significance, the mission critical significance of accounting and finance and how it relates to all of those areas I previously described, and then how these key concepts play into your daily operations, then these consequences are the things that come about. One, there's a huge sense of frustration. When I work with organizations, so many of their finance staff are frustrated because they're not getting the support they need. They feel like all the attention is on services and not enough is on infrastructure and operations, really what's called overhead. And a lot more attention has been given to that in recent years, especially with the real estate bust several years ago in 2008. Foundations were struggling to give out funding because their investments weren't making as much money as they originally were, so they weren't giving out funds. Corporations were laying people off, so they weren't giving out as much funds. And so after that, one of the outcomes of that was a realization that you need strong, sustainable nonprofits that have their operational house in order just as much as their program house. It was never as much a question, I would submit, about the efficacy of your programming, and so you were able to just go and do, and everything was okie dokie and fine because the money was flowing. Once the money wasn't flowing so much, then people realized, well, wait a minute, nonprofits are closing their doors now. Why is that? Why aren't they able to weather the storm? And a lot of it comes back to their operational infrastructure, their capacity. So you have staff who are frustrated either because not enough attention is paid to getting them what they need, but also because they feel ill-equipped. They want to help the organization. They want to be supportive. They want to provide the information, but at their own admission, they don't understand all that they need to understand. They're ready, willing, and able, but they're not being sent to training, or they're not working with an outside consultant that can be that extra set of eyes to look at things, because maybe the executive director who's not skilled in finance is really not the best person to oversee that bookkeeper on a day-to-day basis because they don't know what they're looking for. So if you can contract that out to a financial organization that has a person that can work more closely with your bookkeeping staff, then that gives you that extra level of expertise and comfort, and it lowers that frustration level on the part of financial staff. It's always also frustrating to the director and the board because they potentially are not getting the information they need in the format they need it. So that's another consideration. Confusion, it abounds. You don't know where the money's coming from, whose money are we using. If you have restricted donations, they have to be used for a specific purpose. So you can't take Peter's money to pay for Paul. So it's very important that you're separately accounting for money that comes with strings attached. And you don't want to be confused and wonder whose dollars are being used. I've mentioned the trust factor and the confidence factor on the part of folks outside your organization. There's a lot of managing by chaos. You're a lot of times just putting out fires instead of really taking the time to invest in a structure that will allow you to get the information you need when you need it. And you run the risk of really either both having insufficient funding, but also losing funding. Organizations can lose funding when they are not properly accounting for it. And what I mean by that is there have been situations where if you're not tracking how much of the money you've spent, then you may get to the end of the year and realize, oh my goodness, we still have money left over. How did that happen that we didn't spend, $2,000 of this grant? Well, you don't want to give the money back because it demonstrates to the funder that you were not able to efficiently manage those funds and spend them the way you said you were going to, because you didn't realize you hadn't spent $2,000. And for some funders, you cannot make budget revisions within the last 90 days leading up to the end of the grant period. So if you're discovering this within the last 90 days, you might be out of luck and going back to them and saying, hey, we have this extra money. We didn't spend it. We'd like to spend it down, but we want to spend it in a different line item where originally we thought we would need only $500, but we really need $1,000 or we need $1,500. Because remember, you just gave them a budget. It wasn't concrete, it was an estimate. And as you're going through the budget year, the contract year, the grant year, you realize you need more money in another line versus the original line. So you can ask for budget modifications, but you might be limited as to that time frame in which you can do it. So being able to track those dollars accurately is critical. And then you might actually lose your tax exemption. One of the examples is not filing for 3 years. If you fail to file your tax return for 3 years in a row, you will automatically lose your tax exemption. And the IRS won't remind you after year 1 or year 2 that you forgot to send it in. They'll just send you a notice saying you're no longer tax exempt. So there are implications and consequences that can be easily overcome, or some cannot. Some can be a huge undertaking to remedy and rectify that situation. So those are just some of the basic key hot button concepts, I would say, that I think are critical for you to understand as you move towards strengthening your financial operations and some of the consequences that can come from that. Instead of pausing for questions, because we're so close to the end and we'll take some anyway at the Q&A point, I'm not going to pause here, and instead we'll just move to the next slide and talk to you about available services. So in the consulting area, and this is not all inclusive, it's just a short list of some examples. Certainly helping you to develop a policy and procedure manual for your finance department is something that we can do. It doesn't have to be very detailed and robust initially. It can just be what you need for your current operations, documenting what's actually happening and starting from there. I mentioned being able to help you review the reports that you currently have and see how you might streamline them if they're too much information, or how to expand them if it's not enough information. How you can create summarized reports like a dashboard, a financial dashboard, which is a snapshot of key metrics, things that your board says are important to them. And for example, how many days worth of cash do we have in the bank? Do we have 3 months worth of cash, or we have 3 days? When they meet, that's important to know. So that's something we could work on together. If you're ready to have an audit for the first time and you need some support in coordinating, trying to find a qualified CPA firm, we can help you in that regard. Or just getting your accounting department in place. I've come into organizations before where perhaps the ED was new and they wanted a sense of, well, what am I working with? Can you come in and do an assessment of our department? Then can you tell me what's a good structure for how it should look? Those are some of the examples of consulting services that we could provide. On the training side, these topic areas are available as well as others, and it could be as short or as long as is necessary. It could be module focused, or we could address multiple subjects in a brief webinar or extended day. It's whatever fits your needs. But understanding financial statements, again, these are very critical to communicate information to those who are using them. But if you don't understand what's being communicated, it's that much more difficult to work with them or to even develop them. And we can break that down into layman's terms and make it very easy to understand what you should focus on as a staff person, as a senior manager, as a board member. Preparing and using financial dashboards. I mentioned dashboards. Again, it's like the dashboard in your car, where you can sit in the driver's seat and immediately look at lights and numbers and language and get a sense of how your car is performing. Same with financials. You can pick out key information, put it in a dashboard, and give your user a 30,000-foot perspective of how you're tracking before you dive deeper into the detailed information. Helping prepare budgets is an available service if you haven't prepared them before, or you want to strengthen that process, or even formalize the process so it's documented. How will we work together to prepare this agency budget is something we could partner with you on. And then also board financial roles and responsibilities. A lot of folks say yes to serving on your board, but they really don't understand what they've gotten themselves into until they sit in that hot seat around the board table and they work to interact with all these unfamiliar faces and new folks who come from different disciplines and dynamics and have different leadership styles, and some are more vocal than others. And then, oh, by the way, we're supposed to work together and lead this organization into the future. And then when you add on that the basic roles and responsibilities that are expected of them, which universally there are about 10 things that we as consultants tend to point to in terms of responsibilities. One of those is in the area of finances and ensuring that there's adequate resources. So we have a question: is there still a monetary threshold that triggers the need for an audit? Yes, that's with respect to federal funding. So if you expend more than $750,000 in federal funding, then you're required to have the audit. Your state might have a threshold as well if you receive state funding where they require you to have an audit. But aside from those types of parameters, typically organizations are going to have an audit because they're trying to get some type of funding. And that funding says, as part of your application, you need to submit an audit. So usually that's when an organization will say, okay, it's time for us to get an audit. Let's start that process. But aside from those requirements, either from the federal or state government that says you have to have an audit because of the amount of dollars you spent, or if you have debt, if you've borrowed funding from a bank and part of your repayment covenants say that you have to submit audited financial statements, usually an audit is not an automatic thing that you have to have done. Someone is asking for it to be done, or you're looking to gain funds because of the results of that. And again, it goes back to stewardship. They want to know that you have internal controls in place, policies and procedures, and that you have the capacity and the capability to manage their resources. So with that, that completes the content that I wanted to cover in terms of helping you to really understand the significance, looking at key concepts, understanding consequences, and then briefly discussing resources. So I think I turn it back over for the Q&A component, and we'll allow Althea to moderate that, or Darian, or either just unmute your line and start asking questions. I'll also turn on my video at this point to make it a little more personal as you begin asking questions. Hey there. So thank you for your time and for the few questions that I've gotten to this point, and I open it to the floor for any other questions that might be out there.
All right, great. Thank you, Ms. Glenda. Thank you for that wealth of information. And we do have a couple of questions.
Okay.
That have been trickling in as you were going through your webinar slides. And one of the questions that we have is, what advice do you have around hiring a third-party accounting firm or consultant to manage organizational finances?
I think that's a great option. At a minimum, there's certain things you're going to have to still do because you're originating the transaction. So literally, if people are sending you checks as donations or grants awards, or if you're getting deposits to your bank account directly, electronically, that information you're still going to have to gather and summarize in some format and provide to the outside company so they can then do the record keeping. Or in-house, if you're writing checks and making payments to employees or to vendors, they need to have that information. So at a minimum, there's certain things you have to retain in-house to gather or capture the fact that transactions are occurring. But then turning that information over to an outside third party to then keep track of it in their accounting system is an excellent idea, because they have the skill, the expertise, and they can then provide you with meaningful reports on whatever frequency works for you. If you want it monthly, bi-monthly, bi-weekly, however frequently it is, and then what those reports look like. And so I think that's a good option if you don't have the employee staff on hand, and if you have the resources to pay for that service.
All right. Thank you, Ms. Glenda. We have another question, and it is, we are a new nonprofit. We're trying to learn how to do record keeping, payroll, etc. This has been problematic. Is it okay to have a board member do this work or accept assistance from a volunteer?
Yes, a lot of times your treasurer on the board will volunteer to manage that function because they are a CPA or an accountant, or in the banking industry, they have financial acumen to where they're comfortable with helping in that regard. And when you are a startup nonprofit, your founding board really is more hands-on than established nonprofit organizations. There is a greater expectation if you are the founding board members that you're going to roll up your sleeves and do a lot more hands-on work than you will do in future years, because you're really trying to get the organization up and running and get their footing and their foundational infrastructure in place. So you can enlist a board member who's sufficiently skilled to do some of that work for you as part of their contribution, really, to the organization at their pro bono work.
Okay. All right, great. Okay, we have one other question.
Okay.
Another question in reference to someone being a new nonprofit, asking what are some of the basics we should have in place when just starting out as a nonprofit organization?
Well, the basics would be having a separate bank account for the organization so that all the funds are maintained separately. A lot of times the founders are self-funding things, but having a separate bank account where they can actually contribute those dollars and deposit them into the organization's bank account is preferable. And then having the organization's own checks and writing those checks would be ideal. The second thing would be to preferably start with some sort of accounting software so that you can track those things. And again, I reference QuickBooks because it's pretty simplistic and intuitive. There's lots of QuickBooks advisors out there. You can go to their website and search for what they term as pro advisors, people that are technically skilled and savvy in their program, and you can put in your address or your zip code, and you can find folks in your community that can help you set that up so that's set up properly, and might even be able to contract with you to do some of that record keeping with you and for you. But definitely the separate bank account, the software, and then just dividing up the functions as much as possible. So if you are a startup and there's only 2 of you, for example, just try to implement some baseline controls. If one of you is getting the mail and opening it, for example, then let that person be the one who logs which checks came in the mail. And so it's at least in writing as soon as it comes through the front door, so to speak, that these checks came in. And then turn that over to the next person who's literally going to write up the deposit and maybe enter it into QuickBooks, and then give it back to the first person to take to the bank to make the deposit. And some of it sounds redundant. You know, I always talk about in the accounting profession, we will definitely slow down the process. You want to get things done, you want to get them moving, but we want to make sure that you stay compliant and you have checks and balances in place. So some of this may sound silly in some respects. Well, person A did this and now person B does that, then it's back to person A. But at least you're showing a good faith attempt to implement some controls and paper trails, documentation that evidences things happened. So to the extent that you may not have a full manual and you don't even know what goes in the manual, logically and intuitively, each person has some sense of, I probably need to document this type of intuition. And so just as much as you can write those things down, make photocopies of things, attach them to deposit slips, and just keep a running track of all the revenue that's coming in and all the expenses that are going out, that would be another great baseline.
Okay, great. And then one other question we have is a two-parter.
Mm-hmm.
And the question is, we have had an experience with money being stolen by a former accountant. How
Okay.
do we review records to determine what other aspects of the finances were impacted by the money laundering, and how do we reestablish trust with our funders?
Well, it's hard for me to give the direct answer of what else can be done because I'd have to see what information you have, and I'd have to look at the state of your information. So, you know, if it's just Excel based is one thing, or if you have a checkbook where you've always written in the checkbook every transaction, if you have your bank statements that are referencing all the ins and outs to the bank account. So the direct answer for that one I can't provide, although maybe in just saying that, I'm giving you some clue to, you know, look at the bank statements and trace every transaction that occurred on the bank statement. Look into your Excel spreadsheet and see what you captured in there on an ongoing basis. Look at the check register if you literally were filling that out on the stub every time you received money or made a disbursement. Also looking at what bank cards that your organization might have and the statements from those in terms of if you have credit cards and what activity took place. A lot of times as an accountant, as an auditor, which is what my background is in, when I was in public accounting, I was in the audit department for the majority of the time, we like to rely on third-party information. So even when you get to the point that you're being audited, the auditors are coming in and asking you to substantiate activity by them going to third parties, someone outside your organization. So if you've had transactions and activity with third parties, they're a good resource because they know what happened on their end. So groups that you may have hired on a contract and you agreed to pay them something, see what they have on their end in terms of recorded information. If you've already submitted some invoices to reimbursement entities, see what they received as the request for the reimbursement, because you know what should have gone and then they know what they received. So you can reconcile the two and see if there's some kind of difference. But the truth is, you know, people that steal, that cover up internally, they're good at it. And they're covering their tracks. And sometimes it's hard to find it because they've been skilled at it. But, you know, the next step would be to hire a forensic accountant to really come in and follow the money and look at every piece of documentation. But that can be expensive. So as much as you can do internally to follow the paper that you have, engage outside parties that you've interacted with, and any reports, statements, or contracts that you had with them will be great places for you to look and to help you.
All right, great. Thank you, Ms. Glenda. We appreciate your answers.
Absolutely.
And going through the chat box, that was the last question.
Okay.
And, as we get ready to close out, are there any other closing words or any other recommendations you would like to leave our participants with?
Well, I'm reading a couple questions on my chat. I don't know if they come through on yours, so let me read them and see if you got these.
Okay.
Is it an issue if the same person that picks up the mail and opens the mail deposits the checks to the bank as well?
Okay.
Okay, so technically, yes, because they could do something. They could falsify the endorsement on the check. And if there's a check in the mail, they could falsify the endorsement and deposit it into their own bank account. So that's the concern that we have from an accounting standpoint if one person is doing everything. Now, if someone else is aware that the check was supposed to come in and they don't see it in the bank account in a timely manner, and they reach out to the person the check was coming from and say, hey, we know you were going to send a $1,000 donation and you said you were going to send it tomorrow and it's been 2 weeks and we still don't have it, just wanted to check in with you. Can you confirm that you sent the check? You know, those are ways after the fact that you can try to find where the money went, but that's the whole point of not having the same person do everything. Now, the reality is when you're small, when you're starting out, and for convenience, it could be the same person that's doing all those things. And we get that, we understand that, but that's where all these other, what we like to call compensating controls come into play. What else have you factored into the process that will alert you if something goes wrong? So if you have to have one person pick up the mail, open the mail, deposit the mail, or deposit the checks, what else is in place that if something went wrong, you would catch it? And those other things are that one example I just gave you, if it's a donor where you're expecting a check, or if it's a grantor and they said they've mailed the check, they sent the payment, or even just having the bank statement go to the treasurer and the treasurer reviews the bank statement and doesn't see the deposit on there. Those kinds of things are other ways to help you, even though you have to have one person do everything. So I hope that helps. I hope that makes sense. I think that's the only other thing I have on my end. And parting words, don't be afraid. Don't be too terribly worried. Hopefully I haven't scared each of you. The idea is to share your concerns and your needs and your frustrations and to reach out to us so that we can work with you and help you to get where you need to be. But keep in mind, whatever you can do on your end to control and to protect and to steward your resources so that you build that confidence and you don't find yourself in a situation where you're in trouble or you had bad press is what you want to do. You're logical people, you're intuitive, you know what doesn't feel right, doesn't smell right, or that you think probably I should do a little something extra here. That's what we're asking for at this juncture. And then in the meantime, reach out for that support and help and use the resources here at the Compass Initiative. So I thank you for your time today. Personally, I thank you for your questions. It's always my joy and thrill to do this with you and to help you become effective, efficient, strong organizations so that you can continue to do the great work that you do in your communities. And that's what I'll leave you with today. So thank you very much out there.
Awesome. Thank you, Ms. Glenda. After learning all the helpful information, we inspired you. We imagine you all have questions for us. And if those questions were not answered, please feel free in order to email those to emory@gileadcompass.com, where we will be happy to continue this conversation offline if need. Thank you for listening and asking questions. This webinar will be available on our website for reference. If you want to learn more about this topic or request a training, please apply on our website at www.gileadcompass.com. Tune in next month on Thursday, October the 17th for Advocacy and Policy, the building blocks for the future. Until the next time, have a great day, everyone, and enjoy your weekend. Thanks. Bye-bye.